Welcome to the deep dive. Today, we're really digging into something fascinating. What's actually happening with gold on a global scale?
Yeah, there's a lot going on beneath the surface.
Exactly. And our insights for this deep dive, they're drawn from a really interesting discussion shared recently over on the Gold Talk Show YouTube channel. They're exploring some, well, pretty significant movements in finance.
hmm
Our mission here is to unpack the big questions that come up, like why are major players, the U.S., China, why are they buying just massive amounts of gold right now?
And what does that signal?
Right. What does it mean for the the underlying structure of the global financial system?
Hmm.
Are we maybe seeing the world quietly getting ready for some kind of major financial shift?
And, as the analysis we're looking at really points out, this isn't just about watching the gold price tick up and down.
No, it's deeper.
It gets much deeper. It's about these fundamental shifts, things like global trust, national sovereignty, even the dynamics of international power.
Okay, so let's unpack this then. We'll dive into the key points for that discussion you shared. Try and find the most important nuggets of information.
Thank good.
First off, let's zero in on China. The analysis makes a strong point that China's gold buying isn't really, secretive anymore.
No, not really.
It seems to have shifted into a very clear strategic move.
That's a key takeaway, absolutely. The data they discussed shows the PBOC, the People's Bank of China, well, they've been buying consistently, 6 months straight.
6 months. Wow.
Yeah, pushing their reported reserves over 2,294 tons. And the analysis, it specifically called this one of the biggest reserve restructurings, in modern history. It's definitely a deliberate pivot.
And the why is crucial here. The analysis explains why this is so strategic for Beijing, doesn't it?
It does, very clearly. The main driver, as they discussed it, seems to be this clear goal to reduce dependence on the U.S. dollar.
Makes sense.
And strategically use gold almost like a shield, against geopolitical risks, potential currency conflicts.
Because gold is physical.
Exactly. Can't just be printed digitally. And crucially, unlike those dollar reserves held overseas, it can't be easily frozen by sanctions.
Ah, the Russia example.
Precisely. The freezing of Russia's big chunk of USD assets after the Ukraine conflict started. That was cited as this really stark example.
Yeah.
You can bet other nations, especially China, were watching that very closely.
So avoiding that kind of vulnerability is key for them.
It seems paramount, yeah.
What I also found interesting was the point that this isn't just the central bank buying in China.
Right. It's broader.
Yeah, the analysis noted they're actively encouraging domestic financial institutes, even individuals, regular citizens, to move into gold.
How are they doing that?
Well, things like easing import rules for physical gold if you buy it with yuan or other currencies, and seeing really significant growth in their domestic gold ETFs. We're talking hundreds of millions flowing in from retail investors.
Yeah.
It suggests a much wider sort of society-level push towards gold.
And one of the most fascinating points in the discussion was about how China does this, their method.
The timing.
Yeah, the timing. They seem to buy quietly first, accumulate the gold before they announce anything.
Okay.
They only update the official numbers after the buying is done.
Which makes it hard for the markets.
Incredibly hard. It makes it really difficult for global markets to see it coming, react early, and potentially drive up prices, which would obviously make buying more expensive for them later.
It's different from how Western banks usually operate.
Quite different, yeah. It gives the PBOC a real strategic edge. They act first, tell the world later.
And connecting the dots, this all feeds into China's bigger picture goal, right? The one the analysis mentioned.
Definitely. The internationalization of the yuan, building a financial system that's less tied to the U.S. dollar, less reliant on that Western infrastructure.
And gold's role in that.
Gold acts as that fundamental anchor. It provides stability, especially in a crisis, and could even potentially be a basis for non-dollar international trade down the line.
It's like a bedrock.
It's strategic preparation, really, for a world where the monetary pecking order might shift. While others may be focused purely on digital or abstract assets, China's building this foundation on, well, one of the oldest, most trusted forms of money there is.
Okay, so China's strategy is pretty clear. But then the analysis brought up something equally, maybe even more surprising.
The U.S. buying.
Yeah, the U.S., despite already having the world's biggest official gold stash, apparently they've also been importing huge amounts of gold and doing it very, very quietly.
The numbers discussed were, frankly, eye-opening. Over 600 tons imported in a recent period.
600 tons.
Yeah, a lot of it seemingly coming in from Europe. And just for perspective, 600 tons is, what, nearly 13% of the gold supposedly held at Fort Knox? That's a very significant amount.
And the key point was, this wasn't some big announcement from the Fed or the Treasury.
No fanfare at all.
It was quiet,
Yeah.
deliberate. And the analysis suggested, well, for a country whose global power is so tied to trust in the dollar,
Yep.
this kind of quiet, large-scale buying might hint at some underlying doubt, maybe even within the U.S. establishment itself, about the long-term stability of the current system.
It certainly implies they're preparing for scenarios where that absolute faith in the dollar might not be guaranteed. It's almost like a defensive move, ensuring their own financial sovereignty.
So, based on that analysis, why the silence? Why do it so quietly?
Well, the perspective shared was pretty straightforward. If the U.S. government suddenly announced, hey, we're buying tons and tons of gold, it would likely cause chaos in the markets.
Panic.
Potential panic, yeah. You'd probably see a sharp drop in the dollar's value, maybe a sell-off in U.S. Treasury bonds as uncertainty spikes, and gold prices would almost certainly shoot up dramatically.
So they act first.
Exactly. By moving quietly, they get their position set before the market fully grasps the implications, which, as the analysis pointed out, is actually strategically quite similar to China's approach in a way. Secure the asset first, deal with the fallout later, or hope there isn't much.
And that 600-ton figure, it's massive when you think of annual production.
It really is. Nearly 20% of what the world mines in a year, apparently. The discussion called that level of import for the U.S., especially in a single quarter, extremely unusual.
Suggesting urgency.
Potentially urgency, yes. Especially when you hear reports that global gold supply from mining is actually struggling a bit. Higher costs, harder to find new, easy-to-reach deposits. It makes that big import number seem even more significant.
It is a powerful signal, isn't it? When the main player in the current system starts quietly stockpiling the classic alternative asset.
It's like a quiet admission, yeah, that they're getting ready for a possible change in the rules of the financial game.
Okay, stepping back a bit now. The analysis didn't just focus on the U.S. and China, did it?
No, it made it clear this is broader. Many other central banks are significantly upping their gold reserves, too.
Who else was mentioned?
Countries like Russia, India, Turkey, Kazakhstan, Brazil. Quite a few prominent examples were brought up.
So it's not just a couple of outliers.
Not at all. The analysis framed this as a systematic response, not just coincidence, driven by, fundamentally, a loss of faith.
Faith in fiat currencies.
Faith in fiat, and particularly in the U.S. dollar's central role, which has been the bedrock for so long. That freezing of Russia's foreign reserves really was a watershed moment, it seems.
Showing the vulnerability.
Exactly. It showed just how vulnerable reserves held in another country's currency can be to political decisions.
And gold, the analysis stressed, is seen as the ultimate insurance for national financial sovereignty.
Yeah.
Because? Why?
Because it exists outside any single nation's control. It's not tied to a political agenda. It's not part of a centralized digital system like SWIFT that can be switched off.
Yeah.
It's physical, and it's universally accepted.
Independent.
Precisely. And countries like India and Russia, they're actively weaving gold into their strategies now, especially as they look for ways around the USD for international trade. Gold provides that neutral ground, that universally valued asset base for settling non-dollar deals.
So if you connect all these dots.
Yeah, if you connect the dots, this global buying spree, it's fundamentally about nations hedging. Hedging against a financial system that, to many of them, just doesn't feel completely secure or predictable or even neutral anymore.
It's a move back towards something tangible.
A return to something tangible, something independent of potential rivals' control. Absolutely.
Okay, let's shift to market conditions. The discussion touched on gold scarcity and rising prices right now.
It did. And it made a really crucial distinction.
Which was?
That this current scarcity, this upward price pressure, it's mainly being driven by the big players, the national buying, the institutional shifts we've been talking about.
Not necessarily retail investors piling in first.
Not primarily, no. Though the analysis did say retail is definitely starting to notice and come in now.
And they shared that striking anecdote about Costco here in the U.S.
Oh, yeah, the gold bars.
Limiting how many gold bars people can buy. That detail was described as something like never seen before in previous gold cycles.
Just pretty telling, isn't it?
It really is. It suggests that anxiety about the financial system or maybe just currency losing value, it's filtering down now, reaching the average middle-class consumer.
And the analysis talked about how that retail entry often happens as the news spreads social media, regular news about institutions buying, about prices going up.
Crypto FOMO.
Exactly, fear of missing out. It often leads the public to jump in relatively late in the game. And the caution raised there was that this kind of emotional buying, especially at potentially high prices, carries significant risk for individuals.
Why specifically?
Well, gold doesn't pay you interest or dividends, right? It's fundamentally about preserving wealth, not generating income. So if you buy near a price peak, you could be waiting years, maybe even decades, just to get back to even.
That's a huge opportunity cost.
A massive opportunity cost compared to other things you could have invested in during that time.
So the caution in the analysis was clear. Buying gold for long-term preservation isn't necessarily wrong,
Not at all.
but the timing and really understanding why the market is moving.
That's absolutely critical. If you jump in after the big institutions have already pushed prices way up, well, you might effectively be buying that gold from them at those inflated levels. You could end up being the last buyer near the top of that particular cycle.
Which really brings us to the core argument, the final big point from the analysis,
Yeah, the why behind it all.
that gold isn't necessarily rising because everything's great globally, because economies are booming.
Quite the opposite, potentially.
It's rising fundamentally because of fear. Fear that the global financial system might be, well, fracturing. Fear that fiat money is losing purchasing power faster than people realized. Fear that the stability we thought we had was maybe more superficial than solid.
That was definitely the main takeaway I got, too. The U.S., China, other central banks, they're not buying gold looking for a quick profit.
No, it's strategic.
It's fundamentally preparation. They're preparing for a possible future where the definition of sound money might change, for a world potentially less centered on the U.S. dollar, and certainly for more geopolitical and economic bumps in the road. Gold is their hedge, their way of getting ready for a future where real value might swing back towards tangible, uncorrelated assets.
And the analysis gave some really solid advice there. Don't just stare at the price chart.
Right. Look deeper.
Look at who is doing the buying. Governments, central banks, the very architects of the system we have now, and understand why they're doing it.
Their actions speak volumes.
Their actions suggest a lack of complete faith in the future resilience of the existing model. When the rule makers themselves are quietly shifting their core holdings like this, that's a huge signal. You can't really ignore it.
And this current gold rally, it just feels different from some in the past, doesn't it? Past rallies were often tied more simply to, say, inflation fears or just normal investment cycles. Now, as the analysis pointed out, this is happening while stocks and other traditional assets are facing real headwinds, lots of uncertainty, maybe even stagnation in some areas. So gold isn't necessarily rising because all markets are strong.
It's rising because...
Because, as they put it, maybe everything else is losing direction. Gold is starting to look like the stable anchor again, precisely when other anchors seem to be drifting.
Okay, so to wrap up our deep dive today, drawing on that really thorough analysis we explored, this big, often quiet rush for gold by central banks and major nations, it's not just another financial trend.
No, it's more fundamental.
It feels like a powerful signal, a signal that the world's most important financial players are actively bracing for potentially deep shifts in the global monetary system. All this buying reflects some serious concerns about fiat currency stability, about future resilience, and a growing awareness of maybe more geopolitical and economic risk ahead.
And this really leaves you, the listener, with an important question to think about, stemming directly from this analysis. If the most powerful financial entities, the ones with the best information, the most control over the current system, if they are quietly but decisively moving towards gold, what does that suggest about their own assessment of the future? About the stability of the system we all operate in right now? And knowing that, how might you start thinking about navigating a world where the very anchors of value and stability might be shifting under our feet? How are you watching and interpreting these moves?
That's definitely something to ponder. Thank you for joining us on this deep dive today.
Yeah, thanks for listening.
And if you found this analysis helpful, remember it was drawn from insights like those shared over on a Gold Talk Show YouTube channel. If you found it valuable, please consider supporting their work.
How can people do that?
You can head over there, like their videos, share them with others who you think might find this information useful, and definitely subscribe to their channel. That way you'll stay informed on the latest news and their deep dives into gold and the wider financial world.
Stay informed, stay curious.
Absolutely. We'll see you on the next one.